Hey friends, this week was so huge for me. I received several dividend stock payouts, cash flow, dividend checks this week. And one of those payouts, which was spread across two accounts that I have, was one of the largest, I think it may be the largest payout from a dividend stock that I have ever received in a single day. I'm speaking about the dividend that I received from Altria. I actually own Altria stock across two separate accounts. I want to discuss today a few bullet points on why a dividend investor may want to own a single stock, the same stock, spread across multiple accounts. There are some real advantages to doing that, and I want to share my experience today through the lens of Altria. First, I want to give some background on my experience investing in this stock. It's important to do this because most of the time, I share it all here on YouTube. I share everything, my entire journey. And you guys have seen me over the years. I've shared my successes. I've also shared my setbacks. And I share the trades, everything that I do here. Not all of my stock selections over the years have done as well as Altria. And it always seems on those videos where I bought a stock, even if it's down just a little bit, I get these comments that say, hey, Ian, that did not age well. So I want to really point out today something that did age well for me. And check it out. You can see it on the screen in front of you right now. What I want to share is a reminder, and I will link to this in the pinned comment below. This is from a video that I did not so long ago. Altria, by the way, is now my number 4 largest position. It has eclipsed McDonald's in my portfolio. It has surpassed McDonald's. It's number 4 now. And you're going to see why it passed McDonald's. But anyway, on 12/28 of last year, I bought Altria. I'd already owned Altria, but I made a massive trade in Altria, one of the larger stock trades I have ever made. And I put this on YouTube. I knew, hey, it might not age well, and there might be people coming out of the woodwork to point out the flaws and the setbacks in my journey, as they typically do. But thankfully, this one actually aged well. So the price per share was $40.19 at the time. It was down 16.5% from its 52-week high. I found that at the time, that forward PE of 8.99 for 2023 and 8.72 for this year, 2024, was really compelling. And I felt that the company guidance, which put their PE even lower, even better than the analyst estimates, was compelling at a PE forward of 8.19. I was able to lock in a 9.75% yield. I highlight that in yellow, 9.75. That is pretty sweet, especially because they're growing the dividend on average by about 4%, 4.1 per year, which I also highlight. At the time, the market cap was 71 billion. Now, let's fast forward to today. Today is July 12th. I didn't buy any stock today in Altria, but I just list here the comparable. Well, it has trended up to $47.73. And so I highlight the delta there. The delta is I am up in just about half a year on capital appreciation alone, about 18.8%. That's pretty sweet. I don't really invest for capital appreciation. In fact, I wish my dividend stocks would just kind of be flat or maybe even go down. And I got more comments saying, Ian, that didn't age well. Fine with me, because I buy for the dividend. And you're going to see in a minute, I'm going to explain to you what I did, how I utilized my Altria dividend, and in particular, how I segmented it across two accounts, which is really fun. I'm really glad I did it this way. And I can see even more use cases to doing things this way in the future. But let's keep going. As you can see on the screen in front of you right now, looking at the current statistics for Altria, it's right around the 52-week high. It's appreciated. And the EPS is also trending up. The EPS estimates for 24 and 25 are trending up. We're now looking at 510 and 529. And those forward PEs, though, are higher than when I bought it, despite the higher EPS estimates, just because it's trended up a little quicker than the EPS estimates. So the forward PE is in the 9s right now, which is still not too bad. Company provided forward estimate is about a 9.45 PE. Still not bad. I probably won't buy more Altria. In fact, with Altria, my strategy at this point is I'm done. Being my number 4 largest position, that's fine with me. I could see myself adding to my other core stocks, stocks like McDonald's, for example, but Altria, I'm done. At this point, my strategy is just to take the dividend cash flow out of that security. And as I receive those dividends after about 10 years, especially if they keep growing the dividend a little bit here and there, I will be able to reclaim all of the capital invested, and then I'm done. Then the rest is quote unquote on the house. But let's keep going. As you can see on the screen in front of you right now, I want to just share a few things. And so I have the dividend. It hasn't changed since late last year. They haven't announced the next increase yet, but the starting yield now is an 8.21. This is a fundamental lesson of dividend investing is I locked in a 9.75% yield because of when I bought. My yield on cost will go up even better when they increase the dividend next time. But right now, for anyone buying, the yield is only in quotations, because it's still a pretty solid yield of 8.21%. Payout ratio has gone down, which I like. I like to see that payout ratio coming down because the EPS is going up. I guess this is something to point out to the skeptics is, hey, EPS is growing. Company is not necessarily going out of business, as so many had expected in the past, especially around the time of that December video. But you never know. This has only been half a year. It's very early in the game. 5-year dividend growth rate, as I mentioned before, is 4.1%. So what do I want to share here right off the bat? I want to just go into bullet point number 1. And so, by the way, I ran out of paper, so I'm on the cardboard itself. Got to be frugal as a dividend investor. Who remembers the last time I did this with the cardboard whiteboard? Put in the comments below. If you've been here that long, thank you. Thank you for being here so long on this channel. It means the world to me. And so what did I do with this trade? Well, when I bought Altria, I had been building it many years in one account. Then when I deployed a lump sum more recently in late December, the trade I just shared, I put it in another account. I diversified accounts. And there's many obvious reasons to diversify accounts. I list the obvious reasons at the bottom of this whiteboard. Obvious is just kind of diversifying brokers, being careful in case one of them faces troubles, staying underneath those SIPC and those overall insurance, securities insurance limits. Of course, one would diversify brokers or accounts if it was a matter of taxable versus tax advantage retirement accounts. But for me, this was a different decision. I'm talking about bullet point number 1. The decision for me to put Altria in 2 different accounts with actually 2 different brokers, the reason I did that is I knew when I deployed that big amount last December, that is earmarked for basically paying bills. And so when I received that dividend from that account from Altria, it was easy. I could see it. I could utilize all of it immediately to help pay bills. But all the Altria that I own in the other account, that one could be used for bills, but I'm trying not to. I'm trying to reinvest it. As I mentioned, I'm not reinvesting into Altria because that position is fully built. I need to take capital out of that position at this point. To fully de-risk it after about 10 years. But what I did is I selectively reinvested it into another dividend paying stock. And I'll get to that stock in a minute. But I just want to reiterate, because I don't think people always talk about these strategies online. There's a lot of ETF videos, stock selection. I haven't even talked about this that much, but I will link in the pinned comment below one of the old school videos from many years ago where I talked about diversifying brokers and how I select brokers, things like that. But again, to reiterate, some investors, especially as they're a little further in the journey, it may make sense to buy the exact same stock in 2 different accounts. And the reason for that is it makes it super easy just to earmark dividend payouts. Hey, in this account, I want to reinvest it either directly into the stock that paid the dividend or selectively into something else. And in this account over here, I want to earmark that for just paying bills, for using it for living expenses. By segmenting things that way on an account strategy, it's simplified my life. It's made things just a lot easier to manage on a day-to-day basis. And so and it's easier just for me to keep records that way. That's the biggest part of it. The records of being a dividend investor, especially when one starts reinvesting a lot of dividends, they become very complex very quickly. I have Excel spreadsheets that are massive. Segmenting it this way has made my life easier. But you might be wondering, Ian, what did you do with that Altria dividend in the other account, the first account, where you selectively reinvested it? I'm glad you asked. So check it out on the screen. My patrons already know this. I shared this over on Patreon, which I'll link to in the pinned comment below. I actually have another Patreon on Corner Patreon, a book club meetup coming up soon, and I've announced that. I haven't had a lot of RSVPs yet like I have for past meetups, and so I might have not picked the best time. So just a reminder to my Corner patrons, please RSVP even if you can't make it, because if you can't, I will find another date and time that works for all of us. And we're going to discuss Pour Your Heart Into It by Howard Schultz, which is an awesome book I'm reading right now. And we're just going to talk about all kinds of fun topics, as we always do during the Corner Patreon Zoom meetups. Anyway, the stock that I reinvested into selectively was none other than British American, ticker BTI, and you can see it on the screen. And I have it just all the way on the right. I bought more on the 10th, on 7/10. And this is yet another sin stock. I'm building it up. I may bring this stock almost as big as Altria. So I'm kind of making a line in the sand here. I'm making another kind of, probably one of these things where someone's going to come back. I know it. If it doesn't go well, they're going to come back and they're going to be, Ian, I told you so. Ian, this did not age well, but hopefully it won't be that way. We'll see. And so anyway, why did I buy BTI? I'll link in the pinned comment below. I have other videos on it, but the reason I bought it is I believe it's kind of Altria 2.0, if not better. The forward PE right now is at a 7, and looking at next year, it's in the 6s, so it's lower even than where I bought Altria. They're expecting low single-digit growth, and when they said that, they were talking this year in 2024, they were talking about revenue and adjusted operating profits, and it's paying a dividend of 9.29%. It could be even higher. The reason it's not higher is that payout ratio is only 65%. So there's room to increase the dividend, but I don't think they will. I think they're going to keep a kind of 2.5% growth rate over the years on that dividend, and I'm just fine with that with a starting yield of 9.29%. Actually, it's a little lower than that now because it's been appreciating these last few days, but there's still a lot of value there in my very humble opinion. And of course, these stocks are incredibly risky, being in the sin stock category, but I think the valuations justify or kind of reflect the risk that exists. Market cap on BTI is $70 billion. And so will BTI be another repeat of what I experienced in Altria? Who knows? Will what I experienced in Altria even keep going the way that it has? Who knows? I have a fun model at the bottom of the screen. As you can see on the screen in front of you right now, what that model shows, it's really easy. Let's just say the stock, Altria, remains flat. Let's say the dividend remains consistent at my 9.75% yield on cost. And I'm saying it stays flat for the next 6 months. My return on that tranche I bought late last year, my 1-year return would just be the 18.8% I got in capital appreciation unrealized, plus that 9.75% dividend. That's about a 28.55% return in 1 year, not factoring in the taxes that must be paid on the dividends. Not bad. Not bad for a company, a sleepy dividend stock that many hate and many believe could or should go out of business. And so anyway, enough of sin stocks. I want to get back into account structure a little bit. So I was thinking about this a bit this week, and I have a few other kind of use cases, unconventional use cases, not the obvious ones at the bottom. But number 2, think about it this way. Dividend investors, me, I had to sell. I don't remember how much it was. I think it was about 10% of my portfolio. I was having a meetup here in Idaho actually the other day. A shout out to my friend Kevin. He was nice enough to introduce himself at a restaurant about a month ago. Then we finally scheduled a meetup at Starbucks, and we had a lot of fun talking about dividend stocks and just talking about life, talking about real estate. And one of the things that happens in real estate sometimes when you're a real estate professional is, hey, you identify a property, you want to invest in such property. Well, it requires a lot of capital. And in that case, oftentimes as a dividend investor, you're like, hey, I got to sell some of my portfolio and it's painful. And you all saw me go through this, but I also used it from a positive standpoint to kind of simplify the portfolio, perfect the portfolio, if you will. So I went through that a while ago. I'll try to link to those videos, or at least one of those videos in the pinned comment as well, for those who weren't around in that era. But anyway, what could work, I'm not saying this is what I'm doing. It hasn't evolved this way in my portfolio, but you might think, why would it make sense to have the same stock across two different dividend accounts? Well, another use case, and this one might apply even to the younger investors out there. If you want to avoid getting into a situation like me where you had to kind of have tough decisions, what to sell, what not to sell for a major life purchase like a new home, for example, or real estate investment, cash flowing real estate investment, could be anything. Why not have two accounts? And so there could be one account that's the forever account. Hey, I'm never going to touch this thing. It's on reinvest, never going to touch it. But there could be another account, even with the same stocks, similar stocks, some overlap, where it's like, hey, this account, I'm going to try not to touch it. I'm going to reinvest it. But in that off chance, I need to raise capital for something big. Hey, I'm going to get married. Hey, I'm going to buy my first house. Hey, oh my gosh, the economy has tanked in this duplex over there. That one is on sale. I can go and do this and get a 15% return on cost. Well, hey, that second account, by segmenting it, could be that account. It's not the forever account. It's the account where, hey, you're going to try to keep it forever, but in these things, these cases that life presents, maybe it makes sense to use that account to fund such purchases. And so, interesting food for thought. Another use case, the third one I want to share today. I don't do this at this time, but I've been thinking, I was actually inspired by this whole Altria thing, that I started thinking, boy, historically my stance has been I buy and hold forever, and I really don't like doing covered calls. I don't like doing them because I don't want to risk my stock getting called away. Example is Altria. I'm sure a lot of people writing covered calls on Altria got their stock called away because it appreciated, how much was it again? 18.8% in about 6 months. I don't think anyone saw that coming. When I posted that video late December, I didn't see it coming. I don't think anyone did. I think most people thought they'd come back and say, Ian, I told you so. This one didn't age well, but it did. And so I think it happens. If you are going to dabble in covered calls, it's possible the stock gets called away. That's always put me away from doing a covered call strategy. But think about this scenario. Why not have two different accounts, a main account and kind of a covered call account? You could even own the same stock in both accounts, but that first account could kind of be the forever account. It's the one where the stock is going to reinvest. You're not going to mess with it. There's no options. It's kind of safe. Boy, that Altria I own in that main account, it'll never get called away. But then there's kind of Ian who wants to earn a little extra income, Ian who might have a little extra time. Maybe I am kind of in full fire mode, financial independence, retire early, and I have time to write covered calls. And I don't want it all to get called away, but maybe what I could do is I could have a separate account with the intent in that account of owning the same stocks, but writing covered calls on them. And hey, if they get called away, it's not the best situation, perhaps, especially in a case where Altria, for example, went up so much. But at least I have the first account where those forever holdings reside. And so those were kind of just three creative ideas that I wanted to share in the video today. The first one, of course, I have employed in my personal situation. Let me know what you think in the comments below. And if you did enjoy the video, please go ahead and subscribe. It would really mean the world to me. I have new videos all the time. I'm going to stay up late editing this one tonight for all of you, and those subscriptions, it really encourages me to continue producing even more content. And don't forget to click the like button as well. Thank you so much, everyone. Before I go, in terms of a full disclosure, I own the stocks mentioned today. I'm long Altria, ticker MO. I'm long British American, ticker BTI. I'm long McDonald's, ticker MCD. I'm also long Starbucks, ticker SBUX. Before I go today, in terms of a friendly disclaimer, this video is not investment advice. I'm not a licensed investment advisor. This video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed investment advisor first. It's possible to lose money in the stock market, and the types of stocks I discussed, especially today, are of the riskier kind. Stocks like Altria, BTI are quite risky in nature. I'm just sharing my journey for fun and entertainment. I appreciate all of you. I hope you have a great weekend. Thank you for watching. I'll see you in the comments below, and I'll see you in the next dividend stock investing video.